A couple in Texas bought their dream home in 2024. 6 months later, they discovered $47,000 in foundation damage.
The inspector had missed it. They had no recourse. The money was gone.
A teacher in Ohio got approved for $380,000. She bought at $375,000. 8 months later, her school cut positions. She couldn't cover the mortgage. She lost the house.
A first-time buyer in Florida accepted the first mortgage rate his bank offered. He overpaid by $68,000 over the life of the loan.
I found out 3 years later. 3 different buyers. 3 completely avoidable mistakes. In 2026, the average first-time buyer is now 36 years old. Affordability is at an all-time low. And these mistakes are happening more than ever. We're covering all 7 today. Stay for mistake number 5. It costs more than all the others combined, and nobody warns you about it. Mistake number 1. You got pre-qualified and thought that meant you were ready to make offers. You weren't. You weren't.
Pre-qualification is based on numbers you report yourself, your income, your debts, no verification, no hard credit pull.
The lender takes your word for it. That's it. No documents checked, no commitment made.
Pre-approval is completely different. The lender pulls your credit and verifies your income with pay stubs and tax returns.
They confirm your assets. That's an actual financial commitment, not a guess.
In 2026, sellers in competitive markets reject offers with pre-qualifications before they even read the price. A pre-qual letter is not a serious offer. It's a conversation starter. Nothing more. Get fully pre-approved before you tour a single home, not after you fall in love with one. Before.
It takes 3 to 5 business days. It costs nothing. There is no excuse not to. Mistake number 2. You didn't budget for closing costs and found out about them 2 weeks before closing.
Closing costs are 2 of the purchase price. On a $350,000, that's up to $17,500 due at closing. On top of your down payment, not included in the mortgage. Separate cash.
What's inside? Lender fees, title insurance, appraisal, attorney fees, property taxes prepaid, homeowner's insurance up front. Every single one is real and unavoidable. Budget for it from day one, not the week you make an offer.
One strategy, ask your agent to negotiate seller concessions. Sellers often cover 1 to 3% of closing costs.
That's up to $10,500 paid by the seller on a $350,000 home. Most buyers never ask for it.
Mistake number 3. You waived the home inspection to win a bidding war. In 2026, this is still the #1 source of post-purchase regret among first-time buyers.
A home inspection costs $300 to $500. It takes 3 hours. It can reveal foundation problems, roof damage, faulty...
None of these are visible at a showing. None of them appear in the listing photos. None appear in the listing photos. And here's what the inspection won't tell you: HVAC efficiency, air quality, or insulation performance. It doesn't show how much this home actually costs to run month to month. Ask the seller for 12 months of utility bills before you make any offer. Make it a condition.
More than 1 in 3 first-time buyers in 2026 report unexpected major issues after closing. Almost all of them skipped or rushed the inspection to win the deal.
Never waive the inspection. If the seller won't allow it, walk away. Every home you lose in a bidding war will be replaced. A $45,000 repair bill will not.
Mistake number 4. You bought at the absolute ceiling of what the bank approved. This is how financially healthy people end up house poor within 12 months.
The bank approved you for $400,000.
That means one thing. It's the maximum they will lend you.
It does not mean you can comfortably afford $400,000. Those are very different things. That number doesn't include property taxes, insurance, HOA fees, utilities, or maintenance.
It doesn't account for what happens if your income drops or an emergency hits month 3.
Keep total housing costs, mortgage, taxes, insurance, below 20.
Keep total housing costs, mortgage, taxes, insurance, below 28% of your gross monthly income. Budget 10 to 15% below your approval limit. That buffer is what separates homeowners who thrive from those who don't. Mistake number 5. This is the one. Most people check out at this point in a video. Don't. This single mistake costs more than all the previous ones combined.
You accepted the first mortgage rate your lender offered without shopping around. On a $350,000 loan at 6% is $2,329. On a $350,000 loan at 7%, your monthly payment is $2,320. At 6%, it's $2,098. That's $231 per month difference. Over 30 years, that is $83,060 from one rate decision. $83,000. Lost because you talked to one lender and signed. In 2026, with rates still volatile, talk to a minimum of 3 lenders: your bank, a credit union, and an independent mortgage broker. That is the minimum. A mortgage broker has access to dozens of lenders and is legally required to act in your interest. Use one. The difference is often 0.5 to 1 full percent. That's tens of thousands of dollars. Mistake number 6. You saw the monthly mortgage payment and thought that was your full housing cost. You forgot about the HOA. Average HOA fee is $200 to $300 per month. Many charge over $500.
Some luxury buildings charge over $1,000 per month. That's $12,000 a year over a year the listing price never shows you.
And HOAs can issue special assessments, surprise charges for major repairs, new roof, elevator, parking structure.
$5,000, $10,000, sometimes more. With just 30 days notice, required in many states.
Before making any offer on an HOA property, request the last 3 years of board meeting minutes and the current reserve fund balance. If repairs are being deferred, it's in those documents.
An underfunded reserve means a special assessment is coming. You just don't know when or how much.
Mistake number 7. You didn't know the program's built specifically to help you and overpaid as a result. FHA loans, 3% down. VA loans, 0 down for veterans and service members.
USDA loans, 0 down in rural and many suburban areas. Most first-time buyers have never heard of these. In 2026, 30%
of buyers expect family financial help just to afford the down payment.
Many of them qualify for 0 down payment programs. They have absolutely no idea. Go to consumerfinance.gov and your state's housing finance agency website. Spend 1 hour there before you spend $1 saving for a down payment. It could change your entire timeline. One more thing. Don't open new credit accounts or make large purchases between pre-approval and closing.
The lender pulls your credit again right before closing. A new car loan, a new credit card. Any of these can change your debt-to-income ratio and kill your approval on closing day. After months of work. At the finish line. It happens all the time.
Don't touch your credit in that window. SEP, no new accounts, no large purchases, no changing jobs.
Treat the period between pre-approval and closing as completely financially frozen. Only 32% of people planning to buy in 2026 are actively saving. The market is harder than ever.
But buyers who fail aren't failing because of the market alone. They're failing because of the same 7 mistakes made by millions of buyers every single year. The pre-approval trap, the closing cost blindside, the inspection waiver, the budget ceiling, the rate mistake, that costs $83,000, the HOA trap, and the programs nobody told you existed.
Now you know all 7. Write them down. Share this with anyone you know buying a home this year. This information is free. The mistakes are not.
Subscribe. Every week, we break down one legal or financial topic that costs people thousands when they don't know it. Next week, real estate contracts. What to read, what to negotiate, and the 3 clauses that should make you walk away. I'll see you there.